Hi everyone, this is Michael Kramer on Mod Capital. Today is Tuesday, February 11th, and it's around 4:15 New York time. Tomorrow, of course, we'll be getting the big CPI report. We're expecting core CPI month over month to increase by 0.3%, faster than last month, 0.2. Year over year, we're looking for core to fall to 3.1% from 3.2. Headline CPI expected to rise by 0.3%, down from 0.4, and remain unchanged at 2.9% year over year. Then, of course, on Thursday, we're going to be getting initial jobless claims. We're going to be getting PPI. We're looking for 3.2% year over year, down from 3.3 month over month. We're looking for 0.3%. And then on Friday, we'll be getting import prices, export prices, and retail sales. We're looking for a decline of 0.1% month over month, down from 0.4% last month. Let's take a look at the currency market. Really not much has changed at this point from where we were last week. In fact, the euro just continues to grind higher, finding support every time so far around this 102 area, which is, again, an important spot because that's the 61.8% retrace level of this rally that we had basically in the fall of 2022 into the peak of July of 23. And again, we can also see signs of some positive momentum forming. If you look at the RSI is slowly beginning to show signs of moving higher. And, one could even make a case that perhaps it is forming some sort of bottom process here, which could, again, be telling us that the euro is going to be heading higher from here and strengthening versus the dollar. I know that's not really the consensus view, but the technicals actually look fairly favorable for the euro. We haven't really seen it break support at 102. And until that really happens, we have to think that the euro continues to trade sideways or begins to move higher. I think a really big test tomorrow would be is if we can start heading back to this 104.5 area, really, and put in a higher high. If you get a higher high versus where this was here in the end of January, that would certainly be a solid indication that the euro could be heading back towards 106 and potentially really that the bottom, at least for the short term, is in. But as of right now, we're still below the 10-day exponential moving average, and it still looks like, we could be getting another retest of this 102 area. Obviously, the U.S. CPI report is going to have a lot to say in that, because if we get a strong report or one that comes in hotter than expected, I would certainly think that would indicate that the Fed is likely to stay higher for longer. The market may even have to start thinking about no more rate cuts this year, and who knows, maybe the market would begin to even price in rate hikes. It really will depend on what the data is at this point. But again, I think as long as we stay above 102 on the euro, I think that's really sort of implying to us that the euro is going to be moving sideways or really maybe even start moving upward again against the dollar. On the pound, you can make a case that, you do have a rising trend line on the RSI. It certainly looks like, there's something going on at this 123, 124 area. Again, the big thing here with the pound, which I have to say, the chart, even though you have what looks like an uptrend in it, for whatever reason, this chart looks more challenged than the euros. And I think that's because, at least as I'm looking at it, the things that I notice is this, 2 times we've tried to get above 125. And, so like 102 is acting as support in the euro. 125 is acting as resistance. Yes, there can be an ascending triangle here. Yes, it looks like momentum is shifting. But I think until we get above 125 and a half or 126 really for safety, I think what we're looking at here is a pretty strong level of resistance for the pound. And, again, the chart just looks a little more challenged than that of the euro. The euro, from a perspective of, favoring one or the other, I think the euro probably looks more favorable than the pound, just because it doesn't look like the euro is struggling with resistance. The euro looks like it's trying to put in is finding support and trying to put in a bottom, and the pound just looks like it's fighting resistance at this point, and that just has a little bit of a different feel to me. When we look at the yen has obviously been strengthening versus the dollar. Now, of course, where the yen goes is largely going to be dependent upon where 10-year rates in the U.S. go. If the 10-year starts pushing higher again, I have to think that the yen is going to start to weaken. That's just been the way the trade has worked now for a really long time. So, at this point, obviously you get a weak CPI report tomorrow. I would think that would mean that, the odds of the yen moving back towards this 150, maybe even below it, increase. Likewise, a strong report, hot report, 10-year rates go higher. I think you're talking about a yen that's probably going to move back up to this 155 region in the not too distant future. When we look at copper prices, they've had a really big move higher, moving up to around this 470 area now, which is an important area of resistance. You can see it was an area here, another important area here, and this looks like a third attempt now. Interestingly, when you look at copper, you can also see what looks like the makings of a head and shoulders pattern. You can also kind of make out a case of a bull flag in here. So what this is kind of suggesting to me, at least, is that, copper prices have had a pretty big move. This looks like a very, very important level for copper. If it manages to break out, then I think you're going to see copper probably run back into the $5 area. But right now it's looking like it may need to pause a little and consolidate, just because you can see that we got above the upper Bollinger Band. RSI got above 70. It would be nice to just see copper come back down, maybe and test this 450 area, which is where it really broke out from, and then kind of take it from there before it really starts making another big move up. But again, this has been a really big move in copper prices, and this is something to really keep a very close eye on, because if you can get above 475, I'm not really sure what keeps it from maybe getting back to 5 to even 5.25 over time. It just really looks that bullish at this point. Gold has also had a really big move up. It's kind of an interesting looking chart when you look at the curvature of it. It's like nearly a perfect curve. And obviously we're not going to keep going up in a near straight line at this point, but it is an interesting sort of exponential rise that you're seeing in the price of gold at this point. And you can see that the RSI right now is around 76, and you are flirting with the upper Bollinger Band at this point. So this seems like a reasonable spot where we could see, maybe gold put in some consolidation and pause. It really was all about, for gold at least, was getting above this resistance area at 2790. We were really struggling in this period of time, but once we got beyond that price, the price just really exploded higher. And certainly with interest rates coming down some and the dollar weakening a little bit, that certainly has helped gold prices rise. So I would just continue to watch the dollar, and I would continue to watch interest rates. I think that those are going to be pretty good leading indicators in terms of where gold can go. But right now, I would think that you're probably due for some sort of a consolidation phase here. When we look at the DAX just continues to defy all logic in a lot of different ways. It's almost as if, in some ways, the technicals tend to not really even matter, because you're looking at it and there are signs at times that look like they're sort of bearish. And when you think about what's happening in other parts of the world, it would certainly make sense for that to be the case. But the DAX just continues to power its way up. And the one thing I did notice on the chart today, if you are trying to play the DAX from a more bearish position, is there could be a potential here for a rising wedge pattern having started to be formed. Again, it's kind of a risky view given how strong the DAX has been. But there is that look to it that could suggest we're at some sort of ending diagonal triangle, as they would call it, pattern or point in time. Because again, when we look at the DAX, it's clearly overbought. It certainly has come back in its Bollinger Band. It did move sideways for a little bit, but then the last couple of days, it's really just broken out to the upside. I think, again, your upside is probably limited to somewhere around your upper Bollinger Band, around 22,110. I think the downside, if this were to break, probably takes you back to the 10-day exponential. And if that doesn't hold, then the 20-day simple moving average. But, the lower Bollinger Band's all the way down to 20,600. So that's going to be a tougher feat. But, again, there is the potential, just because it looks like there may be a rising wedge pattern that's starting to maybe form in this, or an ending diagonal triangle, whichever school of technical analysis you want to apply it to. But that's how it's kind of looking to me at this point. When we look at the FTSE, it's really no surprise to see that it's continued to move up. I mean, we've correlated the FTSE with copper prices now for a pretty long time, and it's been a pretty good leading indicator for where the FTSE is going. So, clearly with the move higher in copper prices, it's not really surprising to see the price action we've been seeing there as well. When you look at the FTSE as well, you can kind of make out also what looks like, some sort of consolidation perhaps starting to take place. Although, again, this is a sort of tricky one as well. And again, if you want to play it from the bearish side, there's a case to be made that you have what also looks like some sort of rising diagonal triangle there. But again, when we sort of just look at where this has been, I mean, the 10-day exponential moving average has just really been the perfect support level for this on this entire rally. You can see we rallied above it, we came back to it, we rallied above it, came back to it. And so I would think that if we were to come back down, it would probably be back into this 8650 region, just because that's where the 10-day exponential moving average. Also, if you want to think about it from a bearish point of view, you have what also has the makings of a bearish divergence. Typically, when you see sideways RSIs and rising price action, you think, you're going higher, but on fading momentum. When we look at the NASDAQ, we're not really getting any clear indications in terms of what's going on here. We've really just been trading sideways since, December 4th. And I mean, you could really even make an argument that we've been trading sideways since a couple of days after the election. We're up just 2.5%. And considering the type of moves we've been used to, this just feels like stagnation. And you can really see that in the RSI, just, kind of moving around the 50 area, telling us that there's really no definitive trend or momentum in the overall index. I mean, again, and it just seems like we're hugging around the 10-day exponential moving average. You can make a case that really we're also just trading within the Bollinger Bands. And right now, I mean, that's all there really is to go off of. You certainly have some gaps at lower levels. It looks like there aren't any gaps to be filled from a higher standpoint at this point. They've all been filled. The one thing I will note is that if you can see, it does appear like we're putting in lower highs, but at the same time, it also looks like we're putting in higher lows. So we are consolidating here to some degree. The question really becomes is, what is this consolidation going to end like? And I don't know that we're at that point yet. I think that there's still a little bit more time for this to play out, and the RSI is really not even giving you any clear indication. You can probably move back up to this 21,900 area without really violating the downtrend, and you could fall below 21,580 without violating the downtrend. So I think right now, until you get a clear break in either direction, that's sort of what we're looking at. When you look at the S&P, it's also a very similar look with clearly with lower highs, and clearly you're getting higher lows, depending on how you want to draw it out, which isn't the greatest. But what this is sort of also implying to me is that we're at a point in time where we've been consolidating and we're waiting to find out which way the index wants to break. I mean, the RSI on the S&P has a little bit more of a bearish tilt to it. You can certainly see that it's been trending lower. That's much easier to see than what you could see on the NASDAQ, which is also telling us that maybe momentum has really begun to fade. The 10-day exponential moving average has also been something that the S&P has been hanging around, and we've had a couple of false, attempts to break out to a new high. We had a couple of attempts to break down, and so far we've really not been able to do either or. Again, I think that we're just watching these levels, and I think probably the easiest thing to do is wait and have the market tell you what it wants to do. And finally, we'll look at the Dow. It's giving us a little bit, perhaps more of an indication of what's going on. You can see we had this big decline, came all the way back, got back to that level. We failed, and it looks like now we're starting to turn over. And so on the Dow, at least, it gives us a little bit of a different look. It's not as much that it's an index moving sideways. This is a much more volatile index. And it's also sort of implying to us that there is some sort of resistance in this 45,100 region. So what I would be mindful of here is where this 10-day exponential moving average is. And if it starts to roll over, that's probably going to be your indication that that's now serving as resistance, just the same as it did here. Likewise, if we break out above 45,100, then you're off to the races to the upside. I think right now on the U.S. indexes, things seem a little bit murkier and less clear than where they look, certainly when looking at the European indexes or even looking at some of the currency markets. Anyway, have a great rest of your week, and we'll see you next. Bye.